Welcome to an episode of COVID Convos. I'm your host, Cyril Wong with Butlers Incorporated. I'm joined today by my friend, Jordan Fraser. He's with Freedom 55 and he's a financial advisor. So welcome to the show.
Great. Thanks for having me, Cyril. I appreciate it.
I'm so glad you can make it. I've been really looking forward to doing this. Thanks for taking the time out of your day. So first off, let's talk about what a financial advisor actually does.
Right. Well, we do a lot of things. The biggest thing we do is we kind of customize our approach to the client themselves. So we work with individuals, with families, with businesses, and we help them kind of build out their financial planning and their future. So that's going to mean different things to each person. Sometimes we're going to help them plan their vacations. Sometimes we're going to help them plan their retirement. Sometimes we're going to advise on tax strategies and efficiencies and things like that. So there's a number of things we do, but basically we get to know our clients and we help them kind of take a kind of an organized approach to their finances.
Awesome. So I guess there's a lot of financial advisors out there. Freedom 55 is you probably know a Freedom 55 agent. Why should people listen to you? Like, who are you, Jordan? Tell us about yourself.
Who am I? Right. So, well, my background, I hold an MBA. My background's in business management and business consulting. I've kind of taken the same kind of services I used to offer my employers to the clients themselves. At the end of the day, money, can be demystified, and it really just comes down to some numbers and making them work for you rather than against you. That's who I am. Freedom 55 is a full service financial firm. So we do everything from investment management to risk management, insurance, and these types of things. So we have a little bit of a broader scope. We even do some lending services and such. So we have a bit of a broader scope than some advisors that work at just a bank that maybe aren't able to do these things. So what that means is we can look at the total picture, the full financial picture, not just the pieces that we have an interest in. Because, when you're a hammer, everything's a nail, right? If you're getting somebody that only does one piece or another, then obviously they're going to emphasize that piece. So that's really nice. And then also, we're independent advisors. So like I work for my clients, I work on their schedule. So evenings, weekends, I'm reachable by cell phone at any time. So that's one of the advantages to having kind of a personal advisor, maybe outside the normal channels that people tend to engage with when they're getting started out.
Gotcha. Cool. Hey, who's your target audience? Who are your clients? Are they businesses? Are they individuals?
Anybody with an income, because anybody with an income has these same concerns, right? How do they deploy that income? How do they use that income to achieve their goals and dreams, whatever those may be? So I've worked with clients that are just starting out and buying their first home, and I've worked with people to plan their retirements. When they're at that stage where they're a year or two, or even they've already retired, and they are trying to come up with a plan to how do I make my resources last, for the rest of my life. So anybody in between, particularly on the risk management side, if you've got anybody who depends on you for care or for income, then we need to have a chat about how we protect those people and make sure that they're given all the right advantages in life in case of emergency. So pretty much, anybody who's got a family or anybody who's got some financial concerns, we can certainly help.
That's awesome. So so you're helping people plan to stretch out their finances longer, and you're helping them to manage risk. Is that correct?
Yeah, we do both. I mean, it's easy to come up with a plan, right? And a lot of plans, they're like, oh, if you save $500 a month, your money's going to increase by $500 a month to infinity, right? It'll be great. But there is a component to what do you do when there's interruptions, and there's a way to make that plan a little more bulletproof by planning for the risk management piece. We have a means of quantifying risk, right? What happens if I pass away? What happens if I get disabled and I'm unable to work? What happens if my work is just interrupted and I'm no longer able to save anymore and or provide the same things for my children and stuff? These are all concerns, and these are all things that will normally happen over a working career. So we incorporate those as well. So none of these major things that can happen, throw off the balance too much, right? You can still have the same goals and dreams. You're not making all sorts of compromises because something happened to you at some point in your life. Sometimes these things are short-lived, right? And illness can be short-lived, but it can have a big financial impact that can cause you to have to make a bunch of compromises. So I think I did a quantification on myself the other day. I'm not yet 40. I'm days away from being 40, and I'm a non-smoker and stuff. But the likelihood of one of those things occurring to me before I'm 65 is 37%. If I were a smoker, it would be 55%. So these are things that do happen, and so it makes sense to kind of have a discussion and plan for them.
Okay. So, like, let's talk about the red button issue here, like COVID. Like, how's this affecting how people need coverage, or like how are people being protected by the challenges that we're facing today?
Yes. Yeah. I mean, there's sickness plans and group benefit plans and stuff that are being a part of people's planning if they find themselves ill and away for a long time. But I'll tell you, the biggest lesson that's being learned here has been the importance of like an emergency fund, the importance of having a flexible financial plan. Some people, as they start putting money away, have that kind of their eye set on retirement and will be utilizing things like RRSPs and such, which is a great vehicle. That's a great tool, but it's not a flexible vehicle. So if you were to have been laid off in March and needed some money just to pay the bills, top up your CERB and stuff like this, it kind of exposed some flaws in the flexibility of people's independent financial plans. As an advisor, I always like to start with that emergency piece, like let's get that handled, let's get that put behind us, and then we move on to the next phase. These aren't separate things at the end of the day. You sit on their emergency fund for 25 years, never touch it, and it can be part of your retirement plan, but it is important to kind of have a plan in place for those unexpected things. Maybe it's COVID, maybe it's a new roof. These are the things that can really impact your planning. So it's important that your plan kind of has flexibility built in, and that's been a huge lesson coming out of COVID. Okay.
So how did you get involved with it? Like, do you have a personal story like that? Like why this route? Like why do people really need this? And like, does this, like I'm always curious, like how people get into their preferred profession. And here you are talk about these things. Like how did you get here? And like what products are you like, no, I have to have this? So
well, I got kids. I got to have life insurance. That's a thing. So I'll tell you two personal stories that kind of really made me passionate about this. My aunt was a bank manager. So she was in the finance world as I was growing up. And she bought me a book called The Wealthy Paper Carrier, which is the kids' version of The Wealthy Barber. And I must have got that book when I was 13 or 14 years old. And it blew my mind. It blew my mind that the little bits of money I was making at that time with a flyer route and later, refereeing soccer and things like this could make a difference in my future. So I got that concept early on. I also had the misfortune of losing my father when I was around that same age, and he was not insured. And there was some hardship there. He was the family's, income, winner and such. And it was something that, we just didn't plan for. I mean, he was in his mid-30s. At the time, young, healthy man. And, that had a huge impact on me and my 5 siblings, right? Losing the primary income winner in the family. So that's a position I know I never wanted to put my kids in. So, my debts are covered should I pass away. I have education plans in place for them and funding plans, income replacement for my, my partner and my children so that they, they don't suffer a dramatic drop in lifestyle, should the unthinkable happen.
Yeah, I completely appreciate that. I actually experienced something like that very close to my heart this year. And like guys, funerals cost like 30,000 to 80,000 or up. And that's not something that you want to leave with your family. Like that's just the funeral. Like that's not even handling your affairs or anything else. It's really quite tough. And so, if you don't have a plan, like this is the time to look into that, because I completely appreciate that 100%.
Yeah, and it's never too soon. So some people, geez, and I wish I had thought of it even earlier than I did, because people think, well, I'm in my 20s. What do I need insurance for? And the truth is, you may not really. That's the truth, and I'll help you kind of evaluate and work through whether it's necessary. But the younger you are when you start, the lower your rates are. So people that leave this to late in life, they just end up paying an awful lot more. It's all based really on your age. So we've got people putting insurance policies on their kids, which seems nuts. But there's a type of policy that you can buy a little teeny amount of insurance that'll slowly grow over time, and it'll cost you nothing. But those rates that they get when they're 7 years old, they'll still pay the same rate when they're 60 years old. So you're locking into like this incredibly low rate to get a substantial amount of insurance for your whole life. If you waited until much later in life to get this, it would cost you 10 times as much. It would be dramatically more.
Totally. I'm actually appreciating this a lot more today. Lately, like we're into our 40s now, or like getting close to our 40s, and like we're looking at ourselves going like, hey, like what decisions did I not make because they weren't topics of, they weren't popular, they weren't whatever. And it's funny, but like, like getting there, like you and I both have teenage children, teenage girls. And, we're looking at ourselves going like, holy crap, like, like if I had only known about these vehicles, these things that could have protected me, because I know that I could have used insurance on several occasions throughout my life personally. And also like how, if anything does happen, how does that affect my family? Most recently, I'm actually checking out this course called The Total Money Makeover by Dave Ramsey's. This guy is, I think he's from the United States. He's a top-selling author, and he's a self-made millionaire, but like he went from zero to riches, and it wasn't because like he was this brilliant businessman. It was actually because like he learned how to utilize money in the system and taught people exactly how it is you're supposed to get ahead in life and stop playing into like keeping up with the Joneses, because the Joneses are broke. Now, what I found extremely interesting about that was that despite all these things, he's like, the number one thing that you have to spend money on is life insurance, car insurance, and house insurance, right? Yeah. Like if you don't have these things, those are massive pitfalls. Like I've been in a car accident and I only had third-party insurance. Guess what? My $6,000 vehicle went gone, and I never got a cent for it. I'm glad I didn't have to pay for anything else, but like, guys, can you guys lose $6,000 and just be okay with it? I'm certain I certainly was not, right? And so like that changed my perception of insurance. And so yeah, it's really interesting to see like even mentors that are instructing us on money are saying, hey, you need life insurance, you need house insurance, you need car insurance. Like these are the basics to make sure that if anything happens to you, if anything happens to your asset or your investment, that there's something of a nest egg to set you back on the right path, so you're not actually paying for something that's completely outside of your control.
Absolutely. Yeah. And those are the things that are devastating. They're absolutely devastating. And it's less expensive than people think, right? Like anything, there's, a bunch of different ways to provide coverage for yourself and your family. Some of them are less expensive than others, but really at the end of the day, just having coverage is really the whole battle. And just getting covered is easy and it's fast, and it's, it doesn't have to be terribly expensive, right? A lot of it's going to be based on your health. So if you're healthy and you think I'm healthy, I don't need it. No, healthy is when you want to be getting this, because if you ever become unhealthy, you might be uninsurable. You may never be able to get insurance again. And that's heartbreaking. When I've got people that got, like a simple breast cancer that's been treated, they've been, clean for 5 years and they can't get insurance again. Like it's, these things, people are surviving pretty serious health issues these days, but a lot of them can impact your insurability. So when you're healthy, when you're young, these are the times to have these conversations for sure. It is super important. And having lived through what it looks like to not have, needs planned for and needs met, I got to tell you, it's that's not the way to go. That's not what I recommend.
No doubt. Hey, just quickly, because like you and I are both entrepreneurs, like we're surrounded by groups of entrepreneurs and people with small businesses. Can you tell me like what's the minimum amount of people you need in order to get some coverage? Because I know a lot of us are hoping to get like just basic benefits. Like tell us like what's the minimum barrier to get into that?
If we're talking about health benefits, which would be like, so some people have group benefits through their employer, right? And the people that are not entrepreneurs, obviously, they're much more likely to have something like that to lean on. Sometimes when people become entrepreneurs, that's one of the things that kind of surprises them. Oh my goodness, I don't have any coverage outside of Alberta Health, right? I need to address that. We have individual plans, so you can be just one person and get a benefit plan that mirrors kind of what you had at your through your group insurance through your employer, right? So that's all available on an individual level. If we're looking at small businesses, group benefits are available for companies as small as 3 people. So and then we can install an actual group benefit plan where you guys share the risk and get some preferential rates and things like that if you pool the risk together.
Awesome. Hey, here's a question that like I'm that personally I've been interested in is can you help people get like health spending accounts going or anything like that? Is that something that's in your wheelhouse or is that somewhere else?
Yeah, that's more on the group benefit side. So yeah, which makes sense. I mean, that's something that employers like to provide. So that's part of the setup of the group plan. What kind of structure do they want? Some employers like the group benefits the health spending plans because it's a real fixed amount. They know exactly what that's, the maximum liability is there because they can fix that amount. So yeah, that's something we offer, and it's very flexible. We administer it basically on behalf of those employers.
Fantastic. Yeah, that's a policy that like I've always wanted to look into because sure, like I can have benefits or sometimes depending on your needs, it's nice to just be able to take that money and directly put that against one specific cause, and those things might not always be covered by the benefits the way that I wanted it to, but at least the health spending account gives me that flexibility. So
Totally.
yeah, I'm glad we touched on that.
It might be for dental surgery. It might be for gym membership, right? That's the thing. They're so flexible that you can use them for so many things. That's why they're popular.
Totally. Do you have any final thoughts to share with us, like in terms of COVID or like in terms of a call to action?
Yeah, well, I mean, COVID, I think it's impacted every industry, and frankly, like, we're going to call this silver linings. Okay, this is not a good thing, but a silver lining to COVID is that we've kind of examined the way that we do business, and obviously, out of necessity, we've been needing to make use of tools like Zoom, we're using today, and the various other tools that are out there. So we're really, really competent at meeting remotely and doing our business remotely. More than ever before, things can be done remotely with DocuSign, and we can get signatures and everything can be set up remotely. So it's faster, it's more convenient. It can be done, from the comfort of people's homes. You're not having to come down to the office and complete like medical questionnaires or anything like that. We can do this right from home. So, approvals are faster than ever before. The approval conditions have been relaxed. And more and more people are getting approved without medicals, because even those, sending the nurse out to take your blood pressure and stuff, they'd rather avoid that when they can. So it's really, really never been easier. And I think this is a big win for the clients because, it's so much easier to do business for the clients now.
Fantastic. And if people want to get a hold of you, what's the best way to reach you?
Reach me a number of ways. You can reach me, directly on my cell phone, which is 403-519. 403-542-1919. Don't know my own cell number. And then I'm all over the social media. So like you can find me on LinkedIn. You can find me under YYC Financial Advice on Facebook or Instagram. So yeah, those are the best ways you can connect with me, directly through there.
Perfect. Thank you, Jordan. Guys, we're going to link that information in the description below, so make sure you check that out. Jordan, thank you so much for taking some time with me to explore the COVID situation and to share a little bit more about what you do and what a financial advisor can do for us.
That's great. Thank you very much for having me, Cyril.
Great. We'll see you guys next time on COVID Combos. Thanks.
Take care, guys.